What is going on, guys? Welcome back to another video here on the channel. Thank you guys for joining me. I've had a lot of people, and I continuously have a lot of people ask for me to go through and review trades and different trades, and so that's what I'm going to do today. So on December 21st, I gave out a top 5 to the Griswold Gold members. SPY gapped up. Neo didn't trigger until later in the day. Another one was ticker symbol C. I don't recall what happened with that. The two I want to go through are KO and Pfizer. So Coca-Cola I gave out. This would have been a great Christmas bonus for you guys if you would have played it. If you're part of the Griswold Gold members, you get the top 5. I send out watch lists every single day on YouTube. I put them out on Twitter. I put them out in the Discord. But I give the top 5 out of those plays to the Griswold Gold membership. So there's a link for that down in the description below for the Discord, and then you can go check out the memberships in there. But I'm going to go through the reviews with you guys on Coca-Cola. So the setup I gave, we had this inside bar, I gave you guys these triggers, and I gave you guys the targets. Okay, so now we're going to go take a look at how you could have played this. So we're looking for this to trigger before we get into the trade, and you can buy common shares. I play options, and for the most part, what I speak of is option strategies, but that's not saying you can't do this same strategy buying common shares. You buy at the same spot, you sell at the same spot. There's no difference. So I'm going to go to the 5-minute chart, because when I do these setups, my setups are done on a higher time frame. For the videos, they're the daily, and then I manage the trades on a smaller time frame. So I'm going to show you 2 ways you could have done this. I like the 5. That's me, because it mitigates my risk the most. And as I always tell you guys, the best traders have the best risk management. So these lines are no different than what I was just showing you guys on the daily chart. This was a trigger. This was the first target. This was the second target, okay? Each one of these bars represents a 5-minute candle. So what happens in the first 5 minutes? Okay, we triggered and we go up. Now, guys, here's the problem with a lot of traders. Because they've failed so many times and they haven't cut their losses because they're hoping that the trades go in a higher direction, in a more winning position, when they finally go green, they cut their losses, and it's the absolute wrong way to trade. It's a 180 of what you should do. Instead of letting your losers run, you let your winners run and you cut your losers. And it's a psychology thing and it's a mind thing, but the quicker you learn it, and the easier trading becomes. So this was right here, the first 5-minute bar of the day. So we triggered. So this is where you're buying your options. This is where you're buying your common shares. Now, I also tell you, once we hit targets, that you can take profit, which is fine. You want to go ahead and take profit, take profit. What I do tell you, though, is wait for a retracement through that trigger or through that target, or let the candlestick stop you out. So we triggered here. Let me get a red line here, because now I want to show you guys where your stop losses would be. Okay, let me turn that to red. So we trigger. This right here can be your stop loss. Okay, that yellow line. Or, the bottom of that candle, or somewhere where there's, you have a 20% or less loss is what I would say. Anything more than that, you should be out of that trade already. So you can use this yellow trigger as your stop loss once we pass it, or you can use a, 5, 10, 15, 20% stop loss. Now, once this candle comes across here and you open this candle, again, make sure that trigger, if you're this high up in the trade, make sure this is at the very least your stop loss. Okay, leave that trade even outside of your fees to take that trade and sell that trade. Okay, so now we're through the target. So now there's 2 spots where you can put a stop loss. One is where we currently have it. Let's say we're on this bar right here. This bar closes, this bar opens. Stop loss here, or stop loss at your target right here. That can be your stop loss, okay? So either the bottom of this candle or that green candle. Neither of them hit. So now what happens is this candle closes, okay? So now we just move our stop loss up. Then this candle closes. We move our stop loss up. Then this candle closes. We move our stop loss up. We're up and down, and we're out of that trade for profit. And that's how you trade, guys. That's it. And you might say, look, we ran all the way up. Who cares? I don't care if you guys don't need to call the tops on this. This is a fantastic trade. And the people who right now are saying you could have had more, those are the people who are going to fail at trading. Because, yeah, you could have had more, but you also could have lost more because you were hoping that you were going to hit this target. And that's the absolute wrong way to trade. You let the candlestick stop you out, just like I showed, or you let the target stop you out. Now, again, worst case, guys, if you wanted to, sure, use that target as your stop loss. And you want to let this thing run all the way, and then we come up through that target, and then that target becomes your stop loss there. You want to do that, that's also fine, okay? Let the targets be your stop loss if that's the way you want to play it. I use the candlesticks or the targets, okay? Either one of those. Now let me show you something. That's on the 5-minute chart. Now we can hop to the 15 and we can see the exact same thing play out. I got to skip ahead here to the 21st. There we go. Now let's say you don't like the 5 because it's too small of a time frame. OG trades is like this. He trades off of the 15. So what do we have? Look, 15 minutes up. And again, you want to use that target as your stop loss? Go ahead. Or you use the candles, okay? This candle closes, there's your stop loss. Now there's your stop loss. Then the next candle closes, there's your stop loss. And we move these all the way up, 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 up. And there is where you got out of the trade. If you trade off of the 15-minute. And again, there's a little bit more risk involved with the 15 than the 5. This trade, it worked out. We got a little bit more on the trade than we would have on the 5. Okay, so either way, guys, Coca-Cola should have given you an early Christmas bonus. I want to move on to Pfizer. We're going to look at how Pfizer played out. So Pfizer, if we go to the daily chart, and I'll show you the setup. Here was that inside bar that I gave the setup for, okay? Inside bar, and I gave you target here, and there was a target here, but I've already moved it. So we were looking for the break of this inside bar. Well, what happened was we got that break, but we opened right here. So that's what we call a gap play. I've got plenty of videos on how to play the gap. Okay, there's a playlist with like 4 videos, but I'm going to show you how to do it here. So when we gap up in the morning, when the market opens and we open above our triggers, then we go down to the 15. Now, some people like to use the 30, 5, 3-minute. I prefer the 15, and that's a me thing, okay? Doesn't have to be an anybody else thing, but that's a me thing. So now what happens here? When we gap up, we take the break of the first 15-minute bar. So what does that mean? Okay? I'm going to show you. This outside bar, this white bar, I'll change this to yellow. Actually, we'll use this because that's going to be our stop loss. The way you play the gaps, guys, it's very, very simple. Okay, this outside bar was the very first 15-minute bar. So once that 15-minute bar closes, and you can do this on the 30, you can do this on the 5, you can do this on the hourly, or the 3-minute, or the 1-minute, doesn't matter. But once the first bar closes, it's called the orb, the opening range breakout. Once it closes, you put triggers at the top and the bottoms, just like if it was an inside bar. And then what we do is we look for the break to the high side or the low side, and that becomes our trade. Now, we didn't get it. We got an inside bar. So what do? We just move those triggers down to the inside bar. Now we're playing an inside bar on the 15-minute, okay? And that's all it is. And we're looking for a break. And now the triggers are on the 15, and guess what? We go back in time, our targets are now on the 15, okay? Because that's where our setup was. Okay, if we did this on the 5, our triggers would be on the 5, our targets would be on the 5. So what happens here? We have this inside bar, and there's our break to the upside. Okay, we went all the way up, and we came all the way back down. So if you took profit in here, fantastic, congratulations. If you're letting the bars stop you out, or that 15-20% stop you out, then you're still in this trade. Okay, so now we open up here and we start trending up again. So two things you can do. You can use this target once we pass it. This is what I would do. As soon as you pass through that target, that becomes your stop loss. Okay, and if we don't retrace through that, we open up here now. Okay, this is still my stop loss here. I'm not moving my stop loss all the way down here. When this candle opens, this is still my stop loss until I hit targets. Okay, now we tag the target. So again, you tag the target, you could have taken profit, a fantastic trade on Pfizer. Okay, or you just sit and wait and keep this as your stop loss. Because realistically, guys, you're still in profit here. Whether you take profit here or here, that was still a winning trade. So now once this bar closes and this hammer candle opens up, well, there's our stop loss. Okay, and again, if you want to do this, you can move that as your stop loss. Okay, and so if this comes up and comes back through, again, we're out of the trade. Okay, or if you're leaving it at the candlesticks now, letting the candlesticks stop you out, well, now you just move it up. Okay, so now we've opened and we've come up through that target. Now again, if this is me, I'm coming through this target and retracing, I'm done. I'm out of the trade. I take my profit there. Otherwise, you could have been out at this target or at the bottom of that, at the bottom of that candle. I'm going to zoom in so you guys can see it. So I want to make sure you guys understand this stuff. Bottom of that candle, there we are. Let me zoom in. Bottom of the candle, see? That is our 2-2 reversal back to the downside, and we're out of this trade. And now, this again, guys, this is where people get in trouble because, man, if it went this high, think about how much more money I could get if I just held on. If I just held on. If you just held on. Down through your original trigger, if you just held on, and people are selling here. Okay? Absolute wrong way. This would have been a terrible trade if you would have held it. And that's why we have stop losses in place. That's why I give you guys targets. That's why we let the candlestick stop us out. This, guys, I'm telling you, this is the easiest way you can trade. There's no indicators. You're using the candlesticks. This is what I do. Okay? This is what I do every day to earn money in the stock market. I'm not telling you guys you need to do this. I'm telling you guys this is how I do it. And this is how you could do it, and you probably should be doing it because it really is one of the simplistic ways of trading. Thank you guys for watching. Make sure you're subscribed for more down below. I send out watch lists for you guys every single day. Get it on the Discord. That link is in the description below. Make sure you give me a thumbs up, and we will see you guys all on the next one. Bye-bye.